All right, so we go to the sheriff's sale. And here's the super big kick in the ding ding about a sheriff's sale. All right? I like that. I like that statement. Yeah, I like that. I reserve that for times when it's a really big super kick in the ding ding, because here it comes. If you owe $100,000 and the judge finds against you for $100,000 and you don't have it, so you give them the house and they take the house to the sheriff's sale and the sheriff sells it for $80,000, you still owe the $20,000. That's called a deficiency. And then they will sue you and get a judgment against your person called a deficiency judgment. Remember, it is a general, equitable lien. And if that's not bad enough, let's go one more. That's called mortgage reduction, and under IRS rules, that's treated like income. You get taxed on that money too, like a 1099 on the deficiency. So not only do you pay the deficiency, it's as if you went to McDonald's and earned that $20,000, you got to pay taxes on it. Now, there was some talk about them changing that. It's called ghost income. I don't think they've changed it yet. So the big kick in the ding-ding is you get a deficiency. The super big is they tax you out as well. So now you actually owe more than you lost. All right? Now, just for fun, let me ask you another question. Suppose I owe 100, and it goes to the sheriff's sale, and it sells for 110. Who gets the 10? It is. It's me. It's my house. It's my house. But that also proves what? That you're the dumbest human being on the planet because you had a house worth 110 and you didn't sell it for the 100 to avoid the foreclosure. All right? But I've never seen that happen, by the way. But yes, legally, if it sells for more than I owe, that's my property. That's my house. I owned it. I get the proceeds. But I still got the foreclosure on my record. Okay? Now, there's a new thing that this book has added in the last couple of years, and I want to talk about it. There is a process just before foreclosure that you can call the bank and go, yo, dude, I owe you $100,000. Would you take 90 and call it even? And the bank says, you know what? If you save us from having to hire an attorney, go to court, spend 19 months doing it, we'll take $90,000 tomorrow and call it even. That's called a short sale. Happens a lot. Once again, it's a mathematical calculation based on what the bank says. And literally, that's the thought process of what I'm telling you. If you called me today, Holly, and said, hey, I owe you $20, would you take 18? I got to think, well, it's going to take me $5 to hire Guido to go get you. And it may take 2 weeks to find you. I'm going to be out more than that. If I might as well just take the 18 from you and call it even.
But I'm probably telling you, oh, I lost my job. And
That's fine. And that's exactly why I'm not going after you. And in that short sale process, it is a very long and arduous process because literally what you have to prove now is you have to prove that you can't qualify for the loan they gave you. And that all the things you just mentioned are things they're going to want. We want proof of your income. We want the 2 months tax statements. We want your pay stubs. We want all the stuff you did to qualify, you now got to do to unqualify. Because they're right. They're going to say, well, Holly owes us money, but we've done an asset search on her and find out she's got a free and clear condo in Hawaii. We are not going to allow her to get out of this with a short sale. We're going to force you to go sell that house, pay your bills. So they do all this process, and I don't want to get into the whole depth because this is a 4 or 6 hour course in itself, a short sale course. What I want you to understand is from a numerical reasoning why, based on proof, banks will sometimes take less than you owe them because it's too much time, too much effort, too much trouble to chase you, all of that. Okay? The advantage to a short sale is this. It shows up on your credit as a satisfied lien. You have some late payments, which are way easier to roll off your credit than a foreclosure for 7 to 10 years. So if you can get the bank to do a short sale, it's always more advantageous. All right? Now, and you can play this game. There are some banks, I was involved in one where the bank took the 80 instead of the 100, but they wanted my client to sign a $20,000 personal note to pay the difference, the deficiency, over 10 years. And my client said no, so they went ahead and took him to foreclosure anyway. I have seen them where banks have what they call waive the deficiency, where they take the 80 and just let it go.
If they were making him sign a personal note, is that really a short sale?
Yeah, because the satisfaction of the lien was short of what's owed. This was a personal note outside of that. Think of that. That's the way to think of it. The bank is taking short of what they are owed.
But not if they're asking you to sign it.
It has not, no, because that's outside of this amount for the lien. They're taking short of the lien that they paid. I mean, I see where your confusion is, but it's still called,
Connected but separate.
yeah, it's separate because it's a personal note. And then what happens is you file bankruptcy on it and don't have to pay it. All right, so that's what happens with most deficiency judgments, because most people that file foreclosure, what's the second step they file? They file the bankruptcy too. So even if they do get the deficiency, they file a bankruptcy and it gets rid of the deficiency. But a short sale, so in the grand scheme of things, you got that date for a sheriff's sale. The short sale is before this. All right? You say I'm now 4 months in trouble, not my 19. At 4 months, I start this process, and they drag it out and drag it out and drag it out, and they eventually get to the point where they said, okay, now it's at 16 months, and we found a buyer, and Tiffany found me a buyer at 90, and we made the offer. I've proved that I can't afford it. I lost my job. The houses are upside down in value, yada, yada, yada. The bank takes it, short sale. I walk away with a sale on my credit. The bank loses money, then they write that off.
But it does take months.
Oh, yeah.
This is like a 6-month process.
This is not a typical sale of 30 to 45 days. My longest short sale literally took me 13 months to complete. Yeah. Because like I said, you got to unwind everything you've wound up. You got to unwind that the property's not worth what they paid for it. You've got to unwind this person's income's not what it was. Their job's not what it was. They have no other assets. All kinds of stuff. Let alone the other problem, if there's a second on the property. Because now you got to get the second to take something and the first to go short. And now we're just getting into some of my personal life complaints.
You're talking about a second lien?
Like a second lien.
Like a home equity loan?
Yeah, because here's the problem. A first position will not allow you to give anything to a second if they're taking money short. Because their belief is if you're going to give them even $1, that should be ours. And no second will ever sign off on zero. So when I was really heavy into doing short sales, if they came to me and they said, we got something, and it's a first and a second, not interested. That's too many hours of my time, and I know what the outcome's going to be. It's going to be no. Because you'll never get a second to just give away their lien. They're going to want something, and if you give them anything, the first is going to say, we're not short selling because we should have got whatever you gave them. We're first.
I've heard sometimes they'll turn those into personal loans. Sometimes.
I don't know.
I've heard that.
I've heard the deficiency. That's what I was just explaining. The deficiency, a lot of times they'll say, I've seen them do that. Then they came up with this thing, it's not in your book, but we'll talk about the loan modification. A lot of lenders tried to do that where they take what you owe and put it on the back of the loan and keep it going. That worked a lot of times if someone lost their job. For like the best one, I saw a loan mod that worked really well. Guy got hurt at work, so he was off for like 5 months, didn't make a house payment, went back to work, negotiated with the bank, hey, I'm now back working. So they took the 5 months, put it at the end, and pushed it out 5 more months. There's also some Consumer Protection Acts, so Wall Street gets into it. Wall Street created this thing called the Consumer Financial Protection Bureau, the CFPB. The CFPB is wild, baby. They came in and changed everything and said, we're from the government, we're here to help. You know how that works out. Little piece of news or information I think is cool. The Consumer Financial Protection Bureau, the secretary of the CFPB, is the only secretary in the United States that cannot be fired by the president at will. I meant all the other secretaries, Secretary of Defense, Secretary of Treasurer, all that. He could walk in tomorrow and go, Mad Dog, you're done. And then he's done. The CFPB is the only secretary that has to be fired for cause. Has to be a reason. And they did that so that no president could politically put in one of their cronies to influence the financial district. It was created by the Dodd-Frank Act. The Dodd-Frank Act is the banking act. And I know at least one of you, congratulations, Dusty, watched Too Big to Fail yesterday. Anybody else? No?
I've seen one of them, but.
Yeah. In that, that's what the Dodd-Frank Act does, is trying to keep the banks from getting too big to fail, because that's what the movie's about. We can't let the banks go under, because if they do, they're going to suck so many people down. We've got to keep giving them money. Did you like the scene in the boardroom? He goes, why are we here? The guy goes, I don't know, but when the Secretary of Treasury calls you in, you get on an airplane. And he goes, oh, we don't need the money. Here's the Secretary of the FDIC. Yeah. He goes, here's the Secretary of the FDIC. She'll be in your office tomorrow. Okay, we'll take the money. And I met a guy from, which the funny part is, Wells Fargo held themselves out during that whole thing as being the pristine child on the block, and just in the last 2 years have been caught rigging and financial subversion and all of that. They lost, all the CEOs gone and all that because of all the stuff they were doing, which is funny because then in that they're like, oh, we're too good, we don't need the money. What do you say? We're not like you East Coast banks. We do things differently. So the CFPB deals with the closing. We're going to do a whole chapter on the Consumer Financial Protection Bureau. We're going to show you how they close, the rules in closing, and all of that. Homeowners insurance over on page 256. There are two types of homeowners insurance. There's a cash policy and a replacement policy. The cash policy literally pays out the value of the property in cash as if the value is used. So in other words, what I'm telling you is, you buy a $500 TV 2 years ago, it gets stolen today, it's depreciated down to $200 in value, they will give you the $200. That's the cash value. The replacement policy, you buy a $500 TV 2 years ago, it gets stole today, they pay the value to replace it of today's value, right? So if there's a replacement value one, why would I take the cash value one? Let me do that math. If there's an insurance policy that's going to give me the value of the TV today to replace the entire thing, versus the other one that's only going to give me the $200 value, and I got to pay the other $300 out of my pocket, why would I take the cash one? Why wouldn't I take the replacement one?
Less money to get the cash one.
Keep going. You're right. The premium on the cash value is cheaper per month, right? I'm only paying $50 a month for that cash policy, but for the replacement policy, I'm paying $100 a month. So if you are a mathematician, and they are actually called an actuarialist, you could do the math and figure how many months do I have to save money to cover that $300 that I would lose in that depreciation, and it would tell me which policy I needed.
Nobody saves money for that.
Sure you do. You all have your bank accounts marked insurance replacement fund, don't you?
And then they get mad at their insurance agent.
That's the whole thing they base health insurance on. You know, what are the odds that an old fat guy's going to die versus a young thin girl? Probably more that the old fat guy's going to die, so my insurance is more than yours, right? Same thing. Replacement costs more than cash, so the cost of the policy costs you every more per month. If you didn't want to pay $100, you only wanted to pay the $50, then what you do is you take that other $50 and you put it in a bank account somewhere. Then when your TV gets stolen, you need the $300, you go to that bank account, take the $300 out and buy the TV. That's called co-insurance. It's in your book.
Did your homeowner's insurance drop from going from Bloomington to Nashville?
Homeowners insurance dropped tremendously.
Did your car insurance as well?
I don't know. I don't know if I've even told Jake I moved. My car insurance guy's name's Jake. Not State Farm, but oh, he knows I work here and lived in Bloomington. I probably should call Jake. That's a good point. I hadn't thought about that. Because our homeowners did go down. Say, my wife has her insurance policies. I have my insurance policy. Yeah. No, my car insurance went up. No. Well, my son wrecked the car I gave him. And then 6 days later, I wrecked my car. So like in 2 weeks, I made two claims to my car insurance went from $800 every 6 months to $2,400 every 6 months.
My husband told me I had 2 accidents within 2 hours.
2 accidents within 2 hours. I know a guy that got 2 speeding tickets within 20 minutes. He was.
I got pulled over.
Holy crap! There's like 4 of you in here.
I got pulled over for the same cop within 20 minutes. It pissed me off. That was in Missouri though. So.
I can honestly say I have never had a speeding ticket that stuck in my life, period. 53 years, that stuck.
I fought one once.
I have never had a speeding ticket that stuck.
I got hit in our parking lot. I went to pick up my kids and got sideswiped off. Totaled my car.
Larry got pulled over on the interstate doing 90. Cop gave him a ticket 2 miles down the road. The other cop pulled him over, and the other cop told Larry, yeah, my buddy said you took off awful fast to wait for you. Got him again, 90 within like 10 minutes. No, it's not funny because he actually went to jail. Not just for that. I mean, he's had like 9 speeding tickets. He's lost his license. No, it's not. He's lost his license, went to jail, and all that. One of my favorite story when I got pulled over, you know where Emerson is going out of Beech Grove, that train station, that big hill? All right. Ian, the one that's 22, was going to daycare. I was taking him to daycare, so he was 2. I go over that hill. There's a cop sitting right there. Vroom, cop pulls me over. As we pull over, Ian goes, Daddy, why are we stopping? I said, well, we're in trouble, and the cop's going to yell at us. Just as the cop walked up, and he's like, excuse me? And I said, oh, I told my son that we were in trouble and were going to yell at us. Ian goes, is the police officer going to spank you, Daddy? The cop just starts laughing and goes, dude, slow down. And just walked right back to his car, laughing his ass off, got in the car and drove off. I'm like, sweet ice cream for you today. But literally, he's like, is the cop going to spank you? And the cop's just goes, slow down. He didn't even ask for my license. He said, slow down, turn around, walked away. Yeah. So that's one. Then I had one going to Bloomington just 2 months ago. Black Escalade, driving late at night in the passing lane. Not Escalade, the Suburban. So I go around in my Lexus, and as I get right beside it, I look over, and he looks at me, and I'm like, crap. So I'm pissed now. He pulls over, and he walks up to me and goes, hey, do you know what you did? I said, yeah, passed a slow car driving in the passing lane. And he's like, yeah, I'm doing 70. He said, let me see your license. So I sit back there, and he walks back up, and he's like, well, obviously you don't make this a habit because you've never got a speeding ticket. I'm like, no, you're just driving in the wrong lane. And he's like, here's your license. You probably need to go on home. I'm like, have a good day. But they did pass that law. Isn't it illegal to drive in the passing lane? And that's what I told him. He said, what'd you do? I said, passed a slow car driving in the passing lane. Can't help it, it was you. So didn't get one there. Got one pulled over by a motorcycle cop. Took my license. Walks back to his motorcycle. Just as he sits down on the motorcycle, he jumps up, runs up to me real quick, and you know how you throw playing cards? He took my license and just flung it in the car and goes, today's your lucky day. Got back on his motorcycle, turned all the lights on, turned it around, and took off south down Keystone. So he must have got a call at the, he goes, he didn't even hand it to me. He just threw it in. Shunk. Today's your lucky day. It flew in the window and stuck in the dashboard way up by the windshield and got in his motorcycle and left. So I've never had a speeding ticket, ever. Pulled over twice for not seatbelt. But, you know, it's my right, my car. I ought to be able to dive through the windshield if I want.
I get the blinker all the time. And then the left turn lane.
I love the ones where they drive down the windshield wipers, like late at night, and it's not raining. Dude, you're drunk. You might as well just pull me over, pull me over, pull me over, because that's all it says. Wow. Okay. Yeah. Homeowners insurance, I will tell you there on page 256, there's basic form and a broad policy, and I told you this is not a memorization test. I lied. There is at least one question where I know which one of these goes on which form. And I'm not going to ruin your exercise and fun and studying, so I won't tell you the question. But I will tell you that you probably ought to know which one's on the basic policy and which one's on the broad form policy, okay? And you guys know how to memorize 2 lists, don't you? Memorize one. And if it's not the one you remember, it's on the other list, okay? So I'm giving you a hint. There is a little memorization on that. For you people at home, it's on page 256. Know the basic, know the broad. There is this thing called CLUE, the Comprehensive Loss Underwriting Exchange. So when someone says get a clue, this is what they mean. No, actually, that's not it. CLUE is a database for insurers to keep track of all of the policies that have been paid out on an address by any insurer. That way you can't make a claim to your insurance company to get a new roof and then forget you did that and the next day get a new insurance policy and try and make a claim with them. Because when the first one gives you the policy, they're going to put it on the database. The second insurance company is going to go out and go, hey, look, you were paid off by XYZ Insurance yesterday. We use that when we transfer our ownership of property. You know, hey, home inspection finds a bad roof. If you make an insurance claim, oh, they already made an insurance claim. You kept the money and didn't fix the insurance or didn't fix the roof. It's insurance fraud. Now you better pay for a new roof or we'll have to call somebody. That's blackmail or extortion. All right? So Clue is nothing but a database that all the insurance companies write into, and they keep track 3 to 5 years. They can go back 3 to 5 years. The last thing I want to talk about in this chapter is the flood insurance. Flood insurance is only underwritten by one person, FEMA, Federal Emergency Management Agency. Unless you're from New Orleans, then it's friggin' emergency my ass. Because they never showed up down at, Katrina. Which now we've got other hurricanes we're worrying about. That Hurricane Irma, they said it was the winds are 25 mile an hour faster than an F3 tornado. So FEMA is the only underwriter. So it doesn't matter if you go to Flow for your insurance, they're going to FEMA. Doesn't matter if you go to the General, they're going to FEMA. And that's all based upon whether you are in what they call the floodplain. If your property's in the floodplain, then you need flood insurance. And that floodplain, they rewrite every couple thousand years. Yeah. They just are in the process of doing Greenwoods. Yeah. So like, if it's in the floodplain, you have to get flood insurance because an insurer will not loan you money without that insurance. Now, there is a way that you can actually get out of it if you honestly think you're not in it. Buddy of mine was in it. If anybody knows anything about Greenfield, he lives on the East End, which is down by Riley Hill. He lives on East End. Riley Hill is like 25 feet above the river because there's that whole park. They said Sam's house was in the floodplain. I said, if Sam's house floods, we got other issues because that's about 30 feet deep. So we actually hired a surveying company that shot an azimuth and found out that he was above the floodplain, so he got out of the flood insurance. It cost him about $800 to do that, but he got out of the insurance policy. Here's the problem. You shoot the azimuth, hire the company, pay them $800, and you find out you are in the floodplain, you still got to buy the flood insurance, and you've wasted the $800. So it's not like a freebie test. All right? So the floodplain and flood insurance covers inland or tidal waves. It covers unusual or rapid accumulation, mud flows, and the collapse of land. One of the things I found out on my insurance once was flood insurance or homeowner's insurance doesn't count if the rain hits the ground and then rolls in. It literally has to rain in your house because we had a wall problem because the ground got too soft and the wall collapsed. We called our insurance, like, we don't cover that because that's not water. The water hit the ground's the one that got soft. I said, so basically you're telling me it has to rain in my house. Well, we'd have covered that. And the zombie apocalypse, have you heard that commercial? Zombie apocalypse, but if it happens, you're covered. All right? So I would know those two policies. Any questions about financing? Very long chapter, very in-depth. Okay? Done.